Hello everyone, welcome to our webinar Retail Lending Reimagined with AI. I am Shivam Singh from Newgen Software Solutions, will be your host and moderator for this event. First of all, I would like to thank each and everyone for joining this webinar. The response for this webinar has been overwhelming and we are super excited to talk about retail lending, its challenges, and how AI is going to be crucial in catering to those challenges. Today, with us on this webinar, we have our industry experts, Mr. Vineet Mehta and Mr. Richard Kevin. Vineet, would you take a few seconds to introduce yourself?
Sure. Thanks, Shivam. So I'm Vineet Mehta. I'm part of the sales team at Newgen Software. I work closely with partners making successful stories across the Europe and the UK market for Newgen. It's my absolute pleasure to introduce our distinguished guest today, who brings in a wealth of expertise in both technology and the financial services sector. Richard has been at the forefront of innovation on different parts of the journeys where he has been able to deliver on the customer experience and reducing risk. Thank you, Richard, for joining us today. Would you like to introduce yourself a little bit?
Yeah, love to. And thank you for that. And thank you to NewGen for inviting me to join this webinar. It's a great opportunity for us to talk about how our industry is changing with technology and some of the challenges that it's facing. So I'm a industry specialist at AWS, focused in the banking team. I spend a lot of time working with our customers across the globe, thinking about business use cases and how cloud technology can deliver business value to organizations as they digitally transform. And the guys here have given me an opportunity to perhaps spend some time using that experience and an opportunity to talk a little bit about some of the trends that we're seeing as an organization emerging in banking and in lending, and in particular in relation to how generative AI is being increasingly used by our customers to deliver that business value that I talked about.
Thank you
So
so
maybe I'll
much.
start. Sorry, carry on.
Yeah. Thank you so much, Richard and Vineet, for this introduction. I would request Richard if you can, just walk us through the different sort of, recent trends you are able to view on the AI and how it is going to cater the banking industries and the other industry as well.
Yeah, of course, absolutely happy to do so. So look, one thing I think everyone will recognize is that customer expectations around digital experiences are rising. And this is in part because of the innovation that we've seen within the sector, led by fintech organizations in particular, but also the online experiences that they are receiving in other industries like retail and travel or entertainment, for example. And banks are having to continually balance the desire to reduce their cost income ratios, particularly in lending at the moment where we have a falling interest rate environment, but at the same time deliver to those high quality experiences that customers are expecting, and at the same time manage the operational and compliance risks associated with doing so. And to offer more personalized experience, banks and lenders more generally are looking to understand their customers better and provide relevant offers to meet their needs across all of their channels, whether it be via a mobile phone, by a call center or a branch. It doesn't really matter. How can they provide that consistent service across those channels effectively and in a well-managed way? And one of the challenges in relation to this is that the lending processes that sit beneath these customer user experiences are still reliant on a high number of very repetitive, time-consuming manual processes that are susceptible to errors and bottlenecks. In fact, I saw recently some industry research which suggested it still costs more than $5,000 in many markets to originate a mortgage loan. Now, that's an all-in number that includes such things as marketing and advertising and the like. But nonetheless, there is a high bar, there's a high cost associated with origination of lending. How can financial institutions begin to bring that down, not only by offering more tailored and personalized service, but actually more efficient and cost-effective services? And what we're seeing is lenders leaning more and more into the adoption of machine learning and increasingly generative AI to help solve some of these operational challenges, which, let's face it, have endured the industry for many years. And this is enabling them to make progress in these regards, especially when banks and lenders are also developing and implementing more effective data strategies using the cloud. Because, of course, as we know, machine learning and generative AI is very data hungry. It learns about customers and it learns about processes by the activities you put through it and train the model. And so organizations with greater access to data and a controlled way of managing that data in their organizations are going to be more successful in using that technology. But let's come back a little bit and talk about generative AI for the time being, because really it's in many ways a kind of a nascent technology, which has got a long way to go, I think, to fully mature and deliver its full benefits that it promises to do, and the capabilities for lenders to modernize their businesses as a consequence of that. And I think it's probably helpful at this stage to think about generative AI adoption in a series of waves over, let's say, the next decade or so. In fact, AWS did some research with a partner, Celent, the industry analytical firm, to try and capture what we meant by these waves and how they might impact financial institutions in the adoption and use of this technology. And I think it's quite useful because it helps us to break down what really is a sort of mega trend in the industry, well, not just our industries, but all industries, into some bite-sized chunks or waves in order to think about it. So let's think about phase one, really, or wave one, I should say, of use cases, which really can be described as the ones that organizations are undertaking now. And they are typically very pragmatic. And they're focused on the use cases that promise high productivity or efficiency gains in low risk areas where there are relatively low integration costs. So a good example of this, for example, might be in code development, in using generative AI to help software engineers to debug and test or even write code to support modernizing applications. Or it could mean the development of AI-driven assistants, which customer service representatives can use to manage large sources of information, particularly in relation to, let's say, all the interactions a customer might have with that institution at any one time, and to summarize that information and to contextualize it within the conversation that the customer is currently having, as I said before, across a variety of different channels. So the second wave then, which I think we're beginning to see emerge, but it's still a little way to go, it can be characterized by those higher impact applications and the deeper integration of generative AI into workflows. I'm sure many of our listeners have heard about agentic generative AI and the role that it will play in helping organizations and customers leverage the power that generative AI has in a wide variety of different circumstances. So we're seeing financial institutions, or we expect to see financial institutions deliver much highly personalized interactions with customers via generative AI in customer-facing applications. And if you think about it, if you're looking to personalize service and messaging to ultimately to the level of a segment of one customer, then really you're going to need technology to help you to scale to do that. Because just providing the technology alongside customer representatives will never get you to the scale that you would require in order to deliver that personalization at that particular level. So you can understand and begin to see how that kind of service will begin to develop and be implemented in banks going forward. And this is very, very conscious of the fact that the technology still has issues, and users of the technologies will still have issues in relation to bias and hallucination as examples of risks. that they will want to get comfortable with, that they will want to understand the nature of those risks and manage them down so that, that this technology then becomes applicable in this way. Where the technology goes in the third wave is even more interesting, or at least less clear to my mind, because I think we'll see not only institutions using generative AI in a much more integrated way in how processes and customer interactions take place, but we may also see customers themselves using generative AI to make decisions for them in relation to maybe the automation of the application of a loan rather than the automation of the servicing of an application, if that makes some sense. So really we're seeing then customers put in that first wave, as I described, generative AI to use in a number of different ways. And typically we're finding they're doing that in conjunction with and alongside more traditional advanced analytical tools and machine learning. So I wouldn't think about generative AI as something that is completely sweeping away earlier generations of similar technologies, but actually working alongside that. So we're seeing, for example, customers using generative AI to enhance chatbots because they're much more easily able to understand via their natural language processing skills nuance and context in relation to customers and learn much more quickly about customers' needs as they use chatbots and voice bots to self-serve, if you will, from their bank. We're also seeing them able to capture and track topics and even sentiment of customers across a range of different channels in order to provide the opportunity to improve service to customers over the longer term. We're seeing generative AI being used to automate loan application documentation, again, because of the advanced optical character recognition and natural language processing skills or capabilities, perhaps, of large language models. And we're also seeing customers using these tools to draft incident or investigation reports following automated process alerts and delivering automated regulatory policy monitoring as a consequence. So you can see the application of this around compliance, for example. You can see it around customer onboarding challenges like KYC documentation. If your system is able to initiate the drafting of reports or investigations for then humans in the loop to take up and apply more specialist knowledge and nuance to, then you're beginning to see the improvement and speeding up of some of the processes, which drives the costs of this business that I spoke about previously. If we think a little bit further down the line in terms of the customer journey, we're seeing customers using large language models and advanced machine learning in order to capture data from larger data sets, both internally and externally to their organizations, because of the technology's ability to reliably summarize data. And this could be significantly helpful to underwriters, for example, who are still completing a semi-manual credit or default risk check, but are able to incorporate a larger set of data into their decision making because the models are summarizing it in a convenient and quick way for them to do so. And then two final examples of very common use cases around the use of generative AI. One is identification of patterns that may be indicative of fraud and financial crime. When you think about the large numbers of transactions, the volume of transactions that we're seeing these days, it's very hard for humans and to relatively simple machine learning to pick up those patterns. And so we're seeing this type of technology increasing in its ability to capture and predict new and emerging types of financial crime and fraud. And then finally, as I perhaps mentioned earlier on, the ability of large language models to generate hyper-personalized content and recommendations for customers, whether it be for cross-selling or upselling opportunities within the sort of embedded processes that they already have to service those customers, is an increasingly popular area. And we're beginning to see organizations implementing these kinds of tools and seeing operationally a significant value added improvement in terms of cross-sell success or upsell success rates within customers. So I think one thing that's worth talking about, in addition then to some of the trends in terms of customer use cases that we're seeing, is also to talk a little bit about the how, in terms of what we're seeing customers, how we're seeing customers adopt this technology, because it really isn't something that is often just available off the shelf, but requires some specialist teams and experience in order to write prompts or train models in order to get the kind of outputs, business outputs, that you're looking to get. And what's really interesting is that we're seeing teams doing this with relatively inexpensive, small sets of data scientists and specialist software engineers. I was chatting to a US bank just the other week who have built a tool originally that was intended to help their customer service agents, whether they be in branches or in call centers, to comply with internal policy guidelines. And what happened previously is that service agents who were speaking with customers would go away and read these policies, or indeed search the policies in order to find the relevant elements of that, in order to inform the decision that they would make in how they deal with a particular customer requesting a certain thing. So a kind of standard and classic check against compliance policies to ensure that the bank is managing its operational risk in that regard. They built, or they used generative AI to build a tool which allowed them to, using natural language, to query all of the internal policy documents that the bank had. It turned out there were 5 or 6 different ones that related at any one time to a particular customer inquiry. The tool itself was able to come back with a very clear description of what the policy was in relation to the interaction that the customer agent was having, saved the customer agent and the customer, dare I say it, time whilst that policy check, that solution was delivered. So improved the life of the customer service agent, but also the customer in terms of getting a quicker decision. What was really interesting, however, is the tool was then able to identify a number of conflicts between the internal policy documents that the bank had. In other words, one policy document would say one thing and another one would say something slightly different. And this came out in the use of this tool and allowed the bank then to reduce overall operational risk by truing up the different policy documents that they had around a common set of standards that they needed. And as I say, they were able to do this in a relatively short period of time with just a team of 2 software engineers, which I think really illustrates the fact that the barriers to entry of using this technology are pretty low, especially when you have access to the tools and the different large language models that are available out there via cloud and via services like Amazon Bedrock. So just to sum up, really, before we move on and talk a little bit about some of the challenges that you may be facing as retail lenders, I just wanted to make a point around the same point, really, around data strategy and how important that is in the successful adoption of generative AI and machine learning. And alongside that, the willingness of organizations to experiment, to learn how to use this technology in ways that are valuable to your organization, in ways that deliver against business outcomes at the end of the day. And within that context, I think it's really worth acknowledging that the pace of change with this kind of technology is absolutely huge. I've got colleagues who work directly day in, day out with this technology, and they are exasperated. They're amazed by how quickly large language models develop, how they are re-released with updated functions and features, or more powerful capabilities, or more specialized tools within the that organizations can use. And this is important. It's important because it develops the technology in ways that helps banks and retail lenders to use it, but also it creates some problems and challenges. And so at AWS, we recommend that our customers think very carefully about how they adopt this technology and how they adopt it in a way that allows them to remain flexible and adaptable as the technology changes and develops and has implications for their organization. And in that way, we try and emphasize things we don't think are going to change in this space, acknowledging that a lot will. And those 3 things really are, one, the focus on data as a differentiator. because I think what we're going to find is that foundational models, large language models, are going to become increasingly commoditized. And so organizations that want to create competitive advantage, that all have access to the same large language model tools, will want to ensure that their data delivers better and more valuable outcomes as a consequence of that. The second of the three things then I think that won't change, that organizations should be focusing on when they deliver and develop their generative AI strategies, is to think about investing in the compliance, governance and control guardrails, which allows organizations to use these tools within their organization in a safe and well-governed way. Same goes with investment in time around the evaluation tools that organizations build in order to test large language models in the context of their organization. And also the responsible AI policies and procedures that they develop and put in place that help to control the use of this technology and minimize the risk of negative outcomes with it over time. And it's not that this technology represents any new or different risks in one sense. It's the same with any new technology. The point is going into it with eyes open and an understanding of what good looks like. And we believe that if you invest in people and skills and build capabilities, not just technology tools, then you've got three foundational elements: in data, in governance and control, and in skills and capabilities of people, in order to build a successful machine learning, generative AI function within your organizations, or leverage at least the value of the technology in your business going forward. Concentrate on those three things that won't change over time, and your organization will be much better placed to adapt and to take advantage of the technology then that the industry will adapt and adopt, I think, in large scale over the next 3, 5, 7 years. So if that was really a quick sort of guide to some of the trends that we're seeing in the sector within banking, then what Vineet and I wanted to do is spend a little bit of time thinking about 5 distinct challenges that we know financial institutions face in the adoption of this technology and in the modernization of retail lending. And talk a little bit about those so that we build up a more detailed picture, if you like, of how this technology can be deployed to deliver business benefit. The first of those, as you see on the screen here, is that many organizations are challenged by the amount of customer data they have and the insights that they are able to generate as a consequence of this data. And that kind of sounds a bit weird, right? Because financial institutions and banks have got a lot of data. But I think you'll probably recognize the fact that often data sits in different places, certainly within silos. Sometimes that data can be incomplete or not entirely trustworthy. There may also be data that's outside of your organization that could be used to enrich internal data sources to allow organizations to make better insights. And so having well-governed and controlled data pipelines that link producers of data and consumers of data within their organization in high quality ways, where accurate and timely data and the tools necessary to analyze that data is available to the right people in the organization in order to achieve that. And we believe that many of those tools and many of those pipelines can be built and are enabled by the tools that are available in the cloud. And many of these challenges come down a lot of the time to data wrangling. How do I ensure that my data pipeline linking my producer and my consumer is full with the flow of data that they need, that is accurate and comes from a variety of different sources? And at AWS, we've developed the concept of zero ETL that's slowly becoming a reality in the cloud. I can't tell you that the cloud removes all of your data wrangling challenges, but those services are making it easier for organizations to integrate data from different parts of their organization into their data pipelines to ensure that that information is there so that it can be analyzed efficiently and effectively. And zero ETL really enables the direct data movement between different systems without extensive and expensive pre-processing or intermediate storage. And really what that helps to do is to allow more real-time access to data and analysis. So federated queries, for example, can enable organizations to access a wide variety of different data silos within their organization without actually physically moving the data, or without copying the data, duplicating the data, which only really adds then to the data challenges that you've been faced. And I know that having been in the industry now for nearly 30 years, this is a real challenge. I remember my very first customer project as a management consultant. We tried to build a 360-degree view of customers. And I can remember it was really hard. And I can remember we tried to do it because there was no alternative in Microsoft Access. Now we've got this technology and software that just transforms how organizations can manage and control large amounts of data to create these high quality data pipelines at the end of the day. But bear in mind that technology isn't the silver bullet here. It can significantly simplify and help the data wrangling challenge, for example, but it still needs people and processes and culture in order to create that data first, that data driven environment that so many organizations consider important in able to make accurate and timely decisions to enable their customers in a lending process. Vineet.
Right. So one of the other challenges that we, were looking at, so it's around a topic which is, the most critical and nuanced within banking, which is the risk assessment part of the world. So risk assessment, has a direct impact. It impacts your overall credit losses. It impacts your ability to make profit. It impacts your stability of the balance sheet, right? The core fundamentals of any organization. But it also does, attract regulatory penalties. If you're not, doing the correct kind of assessments, you could get sanctioned, or you may have increased capital requirements based on, what the findings are. But there is an element of reputational damage, higher capital cost, operational disruptions, kicking in. And that's where Newgen's AI/ML-based offering, we've been able to work with banks on their own set of the data that is owned by them and is not shared with the other customers, of course. So we've been able to deliver key outcomes like early warning system, something like a default prediction in the dashboard for them. We've been working on credit risk indicators as well, which helps them understand the the strength of their book and what is it the area that they can invest in, take a longer bet and kind of reap the rewards from. But all of this also goes back to one of our traditional offerings where you can leverage this intelligence to make an automated decision. So what we've done with one of the largest organizations, banking organizations in the US and the Europe market, is that we have enabled them to do straight through processing, which talks about risk assessment to your decision that needs to be done. It's all done through the automated rules engine that we have. And this is something which, cuts down a lot of manual intervention. It cuts down a lot of issues that would crop up if, an underwriter would have to look at something and decide what's the best stance that they want to take. So this is, what we have seen and what we are solving for in the market. And this is one of, of course, I could talk for 3 hours on this topic, but this is one of the most, I would say, critical bits that I have seen in my conversations with across the board, not just limited to one particular credit folks. Richard, what do you think about the next challenge?
Yeah, so this is a challenge that exists across the industry, typically because legacy technology stacks in banks and finance companies have developed and grown up over the course of 10, 15, sometimes 20 or 30 years. They consist of multiple systems that have been developed and amended over time to reflect changes in businesses, so mergers and divestments, for example, or changing operational priorities, or perhaps most importantly, regulation. And whilst these systems, these legacy systems, are frequently performant, the challenge is that they can be very difficult and costly to maintain. And they can also be very difficult to change reliably and quickly. And we know that the digital age, things change very quickly. Innovation is a common theme that most organizations are trying to develop in order to build and create a competitive advantage. But when organizations are operating on these legacy systems, it's really hard to do so. So we're seeing financial institutions and banks and lenders modernizing core systems, and they're looking to do that in the cloud to take advantage of the technology's increased flexibility and adaptability. And that's really important because it enables or supports business agility. If you want to change something in the business, you don't necessarily want to be constrained by the way that your technology and your stack treats a particular business challenge. You want to be able to change that at the same pace, at the same time that your business wants to be able to change. You also want to be able to scale up business volumes easily when business is going really well, or when there's a particular peak in demand at any time, but also then scale down again when you change direction, or when that peak passes for whatever reason. And you only really want to pay for that technology when you're using it. You don't want to buy technology stacks over the long term just to sit there, see it not being used at times. And coming back to that point around agility, we're seeing organizations adopt modern microservices architecture that enables technology to change at a lower risk. And that becomes really important in a regulated industry. If you can build your systems around loosely coupled but highly cohesive microservices, then you have much lower risk associated with making changes in any particular microservice, because the change is limited to a small amount of your technology stack, it then being linked via an API to everything else. So that also means you can begin to make changes in an asynchronous nature to each of the different applications that you have, without having to worry in the same way you do with legacy about the long-term implications or the impacts that would have on different parts of the system over time. So that reduces the cost, makes it easier for organizations to deliver innovation to their customers in a more consistent and lower cost way, and a real advantage in a digital world.
Got it. Yeah, Shivam. Yeah, yeah, thanks, Shivam. I'll talk about a little bit on the personalized customer experience side of the world. See, despite in the world, being in the time when self-service is the key and instant gratification is a given right, we have always, human beings always have this underlying need to feel unique and special, right? So this also extends when we are interacting with the bank, when even I, as a customer of a bank, typically leverage a service. So I would feel that I would want that, whatever interaction and the experience that I get, it's unique for me. And it's not, one out of 1,000 emails that are being sent across. Now, in today's world, I don't think the challenge is collating information of a customer and trying to put it together. The challenge has moved away from it, and it's more on the side of how do you utilize that information in a way that you can offer a unique customer experience. So I'll take two examples of, trying to solve these problems with some of our customers. The first bit is on the traditional customer experience side, where we have seen that the bank's customer, would like to raise the same request, which may be a simple request, which they're expecting to get solved within the day itself on multiple different channels, whether it's through their the mobile app, whether it's through a social media, whether it's through their email or an SMS kind of a channel, right? And then for the bank, the immediate problem statement becomes, how do I address this flood of requests that has come to me while addressing them very smartly? Because you cannot have six different people reach out for the same problem statement to one particular customer. So that is where the omni-channel experience, kind of becomes very critical. That's what Richard, you also spoke about during the first bit, the 360-degree view of customer, right? It's something which is very relevant, and unless that is there, the unified customer experience or personalized customer experience cannot be delivered. So that's the first part of the problem that we've been able to solve at multiple different places, including one of the largest top 50 banks that we work with globally on the wealth part of the journeys also. And then the second problem comes in where, the relationship manager who wants to cross sell or upsell a product, right? This is something where, he has to lean on another team, which is typically the data team. It could be the marketing team who has to come out with product recommendations based on certain persona parameters that their customer has. But this is where Newgen's Lumen becomes a game changer, because what we are able to extend as part of that offer is that the relationship manager gets a conversational AI interface where he can query whatever he's trying to deliver against, and he has the ability to recommend products based on the customer spend data itself. It no longer has to be on generic data insights which are not driven for that particular customer. So he can do multiple level of views on it. He can click it down to the level of one particular individual, but he can also also look at what are the other peers of this individual doing, right? So if there are other people who are in the same age profile, working in similar jobs, they're making similar kind of money, then what is it that becomes the default upsell or a cross sell kind of a product for them, right? And this is the power which takes away the entire burden of him having to hunt down people who can give this kind of a view, and then enable him to leverage it while he's talking to his customers. So this is something which we've been able to solve for, and we find it to be one of the most important utilization of AI and Gen AI being put together at the same time. Richard, what do you think about the last challenge we want to discuss today?
Yeah, the speed of time to market. It's interesting. I think in many ways this is the consequence of what we've talked about in the first four challenges here. We see many customers find it difficult with legacy technologies to bring product and innovation to market quickly, and that the cloud and partners like Newgen enable the speed in this area in order to respond to customers. I've got a really good example of this. They're a public reference of ours, Standard Bank in South Africa. They built a credit decision engine using non-traditional data. In other words, external data to their organization to evaluate loan applications from the unbanked population in Africa. And they started with farmers, so lending money to farmers so they could buy seed and fertilizer in order to grow crops at the beginning of the season. And they were able to use the AWS cloud to reduce the development time and the testing time of this product from an expected period of about 90 days down to just 4 weeks. In other words, they were able to envisage the product, build a solution to it, and deliver it to their customers in a 4-week period. So loan applications in relation to this product are now approved in seconds instead of days, without any manual intervention. And the service itself enables them to scale into multiple different markets, into tens of thousands of new customers seamlessly as a consequence. They haven't had to provision new technology in order to cope with the increasing demand that they see from that product, because they can access that using the cloud. And this experience is not typical, right? In the cloud, you pay as you go, only can pay for what you consume. but what you consume is an elastic and a seamlessly scaling service that can significantly reduce the costs of innovation and your ability to move quickly to bring products to market to meet your customers' needs over time. And for me, in many ways, that really serves as a sort of the end point to the modernization of a process, being able to bring product to market quickly in a way that delivers personalized customer experience that is not held up by the provision of technology from more traditional sources, that can change quickly and easily because of the microservices architectures that organizations are adopting in the cloud, that can accurately assess the credit risk, the commercial risk associated with that new business, because the organization is able to access large amounts of different customer data and derive reliable insights off the back of that. Really bringing together, I think, Vineet, the challenges that we've just talked through.
Yeah, so as part of our partnership worldwide, so there are 4 elements that we wanted to talk about today. We are an ISV Accelerate partner with AWS. We are also market transactable, which means that if any customer would like to evaluate and go through that particular channel, our offerings are available through that and are being consumed by customers today. We have delivered value across 50 plus engagements worldwide, with quite a lot of journeys being automated over a period of time. We do have engagements where the customers are managing their own AWS. It is being managed by Newgen for them, or where a larger partner like a GSI is managing the entire AWS cloud part of the world. So we do work and operate in all 3 fashions for any customer based on what their infra choice is. And we do have a few journeys that are written here. We did speak about a few, from hyper-personalization to AI-powered lending to AI-powered trade finance automation. The Gen AI in content classification and document generation is a very interesting piece. And similarly, the risk assessment automation that we have is also something which can be consumed as a standalone offer. So, Richard, what's your view on the partnership and the way forward?
Yeah, look, at AWS, we love to create partnerships with organizations that deliver value for our joint customers. And I think it's really clear that when we work across different geographies and markets, most customers face a decision whether they want to buy or build solutions. Some institutions want to take the native services that are available on the cloud and build their own solutions to the challenges that we've talked about previously in this webinar. But we also recognize that many organizations want to buy. They want to buy a solution that they can implement quickly and reliably, that's built and hosted on technology which is resilient and compliant and secure. And that's really why we think our partnerships with organizations like Newgen are so important, because they provide our customers at the end of the day with a choice and an opportunity to do things differently and transform their organizations to deliver business value consistently and reliably.
Thank you, Richard, for the time today, and thank you everyone who has joined us during the webinar. We'll be happy to take your questions and answer them accordingly. We'll also give you access to a few content after the webinar. Do feel free to look at them and reach out to either of us here, and we'll be happy to set up a time with you as a follow-up to the webinar. Thank you, everyone.
Thank you.